I want to talk about the difference between income and growth in an investment portfolio and why that's so important to understand the difference and plan for the difference as you grow older and your investment portfolio changes. So in thinking of a total return, say an investment makes 10%. A portion of that is going to be income, and a portion of that is going to be growth. Now, income is the dollars that it produces in any given year of an investment. So think of like a bond, right? A bond, you invest $1,000, and maybe you get, you get 3%, $30 per year on that bond or something like that, whatever it is. That's income. Growth is the appreciation in the price of an investment if somewhere else were to buy it. So if you buy a stock for $10 and it grows to $20, that's the growth of the stock. Now, most investments have a component of each, although some don't. So to go back to a stock, well, a stock has its growth, right? The price you pay if you were to buy it from your brokerage, but it also pays out a dividend each year, or at least you expect it to. So a stock may be a 12% total return, maybe 10% of that is the growth, and then 2% of that is the dividend. So if you buy a stock for $100, maybe it gives you $2 a year in a dividend, and then it grows 8%, so it grows to $108, and you also get that $2. So the total return is 10, 8% comes from the growth, and 2% comes from the dividend there. So, your age is going to depend on what portion of your portfolio you want to generate income and what portion you want to generate growth. And that could be different at different stages of your life. Now, personally, I'm not a big bond fan, so I don't subscribe to the idea that people should just, as they get older, go into bonds. That is because, number one, I don't think bonds are as risk-free as everyone thinks they are. Municipal bonds, I think there could be defaults. And I think at the end of the day with a bond, you're participating in simple interest where you give up your money and you just get that interest rate. And yeah, like once you get your interest, you could reinvest it so it can compound. But I just don't think you're getting adequate return for what you're putting up. Stocks, on the other hand, if you invest like I subscribe to in index funds, you're getting growth, but you're also getting a dividend income. And candidly, even though the dividend rate of stocks is usually less than you would get in bonds, although not always, and it also depends on the maturity of the bonds and things like that. The advantage of dividends as it comes to bonds, dividends over bonds, is that dividends grow over time. A bond, if you do $100 and it just depends on the interest rate, and then once that bond pays back at maturity and you reinvest it, it's still going to just depend on whatever that interest rate is. Stocks, companies tend to increase their dividends over time, and your dividend should increase over time as your portfolio grows. So I think there's a huge advantage there. And if I were, older and sitting there saying, hey, I've got to generate more income for my portfolio, my response wouldn't be to, sell off my stocks and buy bonds to produce higher income, because I think you're stealing from the future, if you're doing that, because you're just not going to get any growth. I'd much rather see someone convert their, equity portfolio to real estate, where you get a higher income, but you do get some growth as well. And that would be, my preferred approach. I think we've always gone in as a society this stock versus bond model because, most people invest with a financial advisor or a broker, and that's kind of what they've got to play with, stocks and bonds. It's never a question of, hey, let's convert stocks to real estate, because they don't make any money that way. So that's why I think we've always had that dynamic, and I don't think that's the best solution. I think if you're gonna, as you grow older, try and generate more income from a portfolio, you probably want to sit there and transition your equities not into bonds but into some form of real estate. You can hire a real estate manager to do the management for you, but I just think it's a safer investment from the perspective of, if a bond defaults, you lose everything, or you have a significant haircut. Ask people who bought some foreign bonds, over the years, Argentina being a good example. real estate goes down in value, that's for sure, but it also, if you buy quality real estate, it also tends to come back, and you often don't notice it going down in volume because the rents don't necessarily change that quick. Also, I just talked about what happens as you get older. How should your investment portfolio change? Well, how should you think about this when you're younger and you don't need the income right now? One thing I've noticed with my real estate portfolio is I have two types of properties. There's ones in the Austin area where the income yield's not that high, candidly, but on the other hand, they grow at a much faster rate than my property in Arkansas, which the income yield is a lot higher, but it's not going to grow very much over time. I'm 41, I'm 42, and I think, to some extent I should be thinking about investing in assets that are going to grow more than produce income. And the reason is as my assets produce income, I do reinvest it, but there's definitely like some loss there in terms of I get the cash, I've got to, put it in my stock portfolio or, save it and reinvest it in another property. And there's times where I just have cash that's not earning anything. And if I was invested in a higher growth real estate, or I was invested, solely in the stock market, I would likely be, my money would earn more over time because it's put to work more. So I think younger people do need to think about, possibly putting more towards growth-oriented assets, because you just don't need the income. And not to say that the income I earn is a bad thing, a few $1,000s a month, but at the same time, I could earn less income but earn a higher growth potential. And then when I am in my 60s and 70s and thinking about living off my assets, that's when it's probably time to convert those into more income-oriented assets. So overall, it's important to remember that in any investment, there's income and growth, and you have to think about, what an investment can provide in terms of each, and also what you need at any given time. So that's an important consideration in investing.